Hello, would you like to be able to find good paying dividend stocks? Well, today I'm going to share with you the guidelines I use to find the dividend paying stocks that I primarily invest in. I'm also going to share with you the tools that I use, and at the end of the video, I'm going to actually talk about an investment I made today. So, thank you for tuning in. With that being said, let's get started. Welcome to my channel, Easy Investing Income, a place you can come to learn about dividend investing as well as selling options. Before I get started, I do want to mention that I'm not a professional. This is something I do as a hobby that I enjoy. Um, so that being said, let's go ahead and get started. I first want to mention how the dividend stocks fit into my investing strategies. I try to find stocks that pay between 3 and 4% dividend and that aren't overly volatile, meaning they don't move um, either up or down by major amounts. I invest in things like Coca-Cola, ExxonMobil. Um, I'm going to go through this list, and this is one of the tools I use to find the different stocks. But I also like the stocks to, you know, where they or the companies where they actually increase the dividends over at least the previous 10 years. The ones here that I'm going to show you with this tool, they've actually increased their dividends, I think, over 30 years. They're what's considered dogs of the Dow. Also, I like to find stocks that are very optionable, meaning you can trade options on them and you can make pretty good premium. So that's my primary focus, and it's some of the things I look at. Now, the tool I'm showing you here, you can actually, I'm going to have the link for it below, but you can actually see all the different dividend aristocrats, and you can actually sort them. So if you want to look at dividend rates, which is a lot of times what I do is I try to look at the dividend yield, and this is updated real time. If the market's open, you'll actually see it changing. So you can actually see, and again, I'd like to earn between 3 and 4, but I will invest in stocks that have lower dividend yields like 2%, especially if they're increasing them. If you buy something now and you hold it for 20, 30 years, or even for 5 years, and they steadily increase it every year, if you think back to your original investment, you're getting a really good yield. So here you can see AT&T I invest in, ExxonMobil I invest in, um, Chevron I've looked at. I may actually invest in it. Um, AbbVie I actually invest in. Realty Income I invest in. Um, so a lot of these Consolidated Edison. So it gives you a good idea of these specific dogs of the Dow. And here I can see this is the price change for the day. So I can see Chevron's quite a bit down. AT&T is up. So, AbbVie is down 1%. So it's having a down day. And part of the reason why I'm looking at the pluses and negatives, or the positives and negatives, is if it's a down day, then there could be quite a bit of premium um, in selling an option like a put option. And again, a put option, I'll use an example of Coca-Cola that I've used before. So say Coca-Cola is trading at 50 and it's having a down day, and I want to pick up that stock at 45. I can sell a put at a strike of 45 and make pretty good premium if it's a down day. If it's an up day, then typically there's less premium for puts. And again, a put, if I sell a put, I'm selling the opportunity for someone to sell me those shares at a specific strike price. And the same or a similar situation is when I sell what I call a covered call. For instance, with AT&T, seeing that it's an update, not by a whole lot, I know that the premium should be pretty good on what's covered calls on on the strike prices. And to give you an example using the AT&T, so AT&T is close to 30 right now, and if it was having a significant update, which point or not update but increase 0.42% isn't a big change. Um, say it was 1 to 2%, then there could be quite a bit of premium for AT&T. Currently, I don't have any covered calls with AT&T. I have actually sold covered calls with them in the past. Again, going back to that example, if it's 30 and I want to sell it at 33, well, I could sell an option contract with a strike price of 33 down, 30 or 60 days expiration, and hopefully pick up some pretty good premium. So that's the main reason why I'm looking at these kinds of investments. And this just gives you a list. It gives you a good idea of different stocks you can invest in. We've got Procter and Gamble. I also invest in Procter and Gamble. Aflac. I've looked at trying to pick up Aflac. I've actually sold some puts on it. So you can see it lists a lot of the different stocks, and the fact that you can sort it by dividend yield, payout ratio, market cap, beta. It's a nice little tool you can use, and so this is one tool I use. Another one that I will use, and it's not really a tool, it's a podcast that I like to go listen to, and it's called InvestTalk. You can find it on any of your podcast players, and they give an analysis. I believe it's 4 days a week, and they go over phone calls, people calling in talking about stocks, and they do quite a bit of analysis. So I'm going to share with you one of my investments today that I heard from them actually today on their podcast, and I decided to go ahead and invest in one of the companies that they mentioned. So, and then I also use Schwab. So here, I'm actually, well, I might as well go ahead and share with you. The company they mentioned was Polaris, and Polaris has, it's not through the roof. A lot of the stocks right now have really, they're at 52-week highs. They're not quite at a 52-week high, but they're not outrageously expensive, especially with their earnings. But here you can actually see the chart. You can actually look at, if I wanted to look at dividends, I can see what they've done dividend wise, and you can see they've had a steady increase of dividends going all the way back to 2011. They've increased their dividends every year. So this was looking at the dividends, looking at the analysis, looking at the earnings. This is one of the stocks that I decided to invest in. It also, I like how Schwab gives it an A rating. So this is one particular investment that I did make earlier today. I actually sold a put on it and made, I think I made about 150 in premium, and it's 30 days out with a strike price of 115. So it's currently at 132. When I sold those that contract, it was actually trading right at 130 or slightly below, and so now I probably could not get anywhere near its good premium. So at that point, it was trading down. Now it's trading up. So my hope is that with selling that option, I can pick up this stock at 115. What I've found is I've sold a lot of put contracts, and probably half the trades I've made in the last 9 months have been puts, and none of them have been assigned. I've been able to make steady income with them and not picked up the stocks. So one thing I am thinking about is actually increasing the risk and probability of being assigned so I can earn more premium and maybe have some get assigned. It would not be a big deal if this is assigned. This is one of those stocks that I wouldn't mind owning. Polaris they've got ATVs and jet skis and different things that they sell, and it's something I like, going into those dealerships and looking at the different ATVs that they have. So another podcast that I like is Retire Sooner with Wes Moss. It's something I use fairly often, and he will also give investment advice. I believe it was his podcast that I got the original idea of to invest in DVY, which we can go to DVY really quick. and it's an ETF that is a dividend investment ETF. So it invests primarily in similar stocks as to what I was just showing you with this dogs of the Dow. It invests in a lot of the dogs of the Dow. Um, so in an essence, I use those two podcasts. I use the tool, this dogs of the Dow, to find these kinds of investments. And I also, when I do my investing each month, I do have a list of stocks that I keep in my trading spreadsheet. So I can show you that real quick too. Um, so here on the left of the spreadsheet, this is for May. This shows all the different investments that I look at. So we got Pfizer, we've got Cisco, um, Dover, Caterpillar, Prudential. So all of these I look at. So once I found a list, I stick to those and I come back to them quite often, um, to look for some good premium. If we go down to my last trade, which again is Polaris, PII, you can see that I traded it today and I earned, and I actually did a vertical spread, and I earned around 100 and what is that, 100 and almost 160, 158. So I earned some pretty good premium with that. And again, it was from listening to InvestTalk, and they gave some good advice on Polaris. Um, so that's about it. I primarily use those tools. I identify a couple of investments or stocks and ETFs that are real interesting to me. DVY, like I mentioned earlier, is another one. Let's move it out of the way. It pays pretty good dividends too. So here we can see it's at 2.99 now. So it's gotten pretty pricey. You can see it's come up quite a bit. At one point, I was able to invest in it some around 100, between 80 and 100. And at that range, you actually earn 4 to 5%. 2.99 is lower, but let me change this to the last 6 months, and you can actually see how much it's increased. So it's gone all the way up to 124, and it was right around 100 and got into the 90s. So it's gone through a major growth spurt. So on a pullback, I would probably invest in more DVY, and partially because if you're starting out, it's a really good ETF. So if you're not sure what to invest in and the market corrects, you don't have a whole lot of time. You know, DVY is one good ETF that you can invest in. So I hope this has been interesting. I hope you've liked this video. Please add comments below. I will have any pertinent links below. And, please hit the like button if you like this video. And please check some of my other videos. And I hope you tune back in. Have a great day. Bye-bye.